The business cycle is what drives liquidity. So we can use stuff like the ISM survey as where we are in the business cycle. If it's below 50, we tend to be in recessionary or contractionary times. If it's expanding and above, we tend to be expansionary times. But what we know is when the economy slows down, the answer to that is more liquidity, because that's how you stabilize the economy, whether it's cutting rates or whether it's increasing the Fed balance sheet. Made me think, okay, if the liquidity cycle is turned, we know what happens, which is over this period, the economy will weaken. So the probability of more liquidity, or more cowbell, as I put it, comes back into the market. And therefore, forward-looking asset prices, technology, crypto, will outperform. And that's been exactly how it's played out. Never feels that way because there's so much bloody attacking and misery online, but it's actually played out exactly right.
Welcome back to Library of Wealth. Today we have Real Vision CEO Raoul Pal giving us his updated prediction for Bitcoin and Ethereum and why crypto and technology will be the biggest investments in 2023. Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the bear market. In a new Bankless interview, the former Goldman Sachs executive gives a portfolio update, saying he's still invested heavily into one of Ethereum's biggest rivals. He'll go over his investment thesis on which cryptocurrency asset has the biggest upside in the coming months, and why this year more than ever, we'll see massive capital pouring into the crypto space. With Pal lining up for the next bull market, his forecast for this year is bullish, as Bitcoin and Ethereum continue to dominate the top two spots by market cap. Let's get right into the latest interview with Raoul Pal, as he gives his latest updated prediction for crypto and where we're headed in the coming months. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here. Let's get right into the video.
So there's a bunch of liquidity measures. They're not easy to do. Some of them you can get on TradingView, I think, because some people have built them. One is Fed net liquidity, which is US centric, which I don't think is the most important. And that is basically the Fed balance sheet minus the Treasury general account, which is the Treasury building or reducing liquidity, and the reverse repo. Those three things. And they actually have mirrored asset prices pretty well, but it's not all about the US, as we talked about before. So then you need a global proxy. So the global proxy that's easier for people to find is global money supply. But again, even that's difficult because there's no one measure of global money supply. So you have to kind of construct it yourself. But again, I think people have got that on TradingView now. How good it is or not, I don't know, because we use Bloomberg and Refinitiv and other data sources. And then finally, the big daddy of it all is we've got the Global Macro Investor, which is my research service, the weekly liquidity index. That's based around the G5 central bank balance sheet. So that's the US, the ECB, the PBOC in China, the Bank of Japan, and the Bank of England. That seems to explain 97% of the entire price movement of the NASDAQ, and about 87.5% of Bitcoin. The reason why Bitcoin actually has a lower correlation than the NASDAQ is because of the up cycles, because the adoption rate is so high.
Because it goes up.
The blow off tops, right? That is the reason, because the compounding of that. But other than that, it's all driven by this factor, which is the central bank balance sheet is different to the general liquidity in the market, i.e. money supply and stuff like that. The central bank balance sheet is actually debasement of currency. So debasement of fiat currency is a thing that most people don't understand because it's not obvious. But when you are printing more of a currency, particularly when all the central banks are doing it, you're lowering the denominator, which is the same why the Venezuelan stock market looks like it goes vertical. It's because the Bolivar keeps going lower. So that is what is driving almost all asset prices. So once I started adjusting for that, I realized there was two assets that did better than anything else. Everything else, like equities divided by the Fed balance sheet, is a simple way of doing it, for people who can't find a larger set of thing. The S&P's gone nowhere since about 2012, since QE really became prevalent, or 2008 really. And we found the same with real estate, gold, everything. Technology, yes. Why? Adoption trends. Right? Technological adoption is relentless. And the other one that beats it all, obviously, is crypto, because it's got the technological adoption and it counteracts the debasement. So once I found those out, I realized liquidity was going to become the really important driver, and I think it'll be the thing people talk about for this cycle.
Raoul Pal says that crypto is about to outrun virtually all other asset classes, alongside the continuation of long-term currency debasement. He says that following the collapse of First Republic Bank, it appears as if the US will move into another chapter of money printing to be able to service yet another massive debt. Another crisis the US is now facing is the commercial real estate crash, which Raoul says the refinancing cliff will be so sharp and deep that values are unlikely to recover even by 2040.
Usually it stabilizes first. If you remember 2018, the Fed had been shrinking the balance sheet. Most of the global central banks did. The Fed go on pause. Some of the other central banks start doing the same. That moment, assets took off. Bitcoin was up 300% into June or July of that year, then corrected into 2020. But that period of pause is like somebody taking the foot off the beach ball and it rises out above the water. Then the thing that lifts it is when they really start expanding the balance sheet, i.e. when recession is coming or you've got a banking crisis, both of which we're toying with right now. This is the summer months, so it tends to get a bit quieter, but that narrative probably picks up again and the beach ball gets lifted up by the gust of wind. So this is the kind of moment in liquidity where things have bottomed because the central bank balance sheet stopped at shrinking and Japan started printing a bit. China started increasing money supply. The UK had to print quickly because it had a pension crisis, and then the Fed had to print quickly for the bank crisis. These were isolated events, but they're the markers that we know the more cowbell is coming. And then we're waiting for, okay, when do they really swing into action? Money printer go burr. You know, you can use the very simple bell curve meme of the money printer go burr. That's the one, that's the big signal. So really it's all about setting yourself up for that big signal, because crypto spring, which is where I think we got to from October, tends to be choppier, harder to trade. It's not an up-only market. It tends to make good progress, but it tends to be complicated because there's a lot of opposite narratives, which we're seeing, right? People don't trust this rally because of banning or because of this, because of that. The proven outcome for a banking crisis is inject liquidity into the system. We also know that there's a commercial real estate crisis. So there's two parts of this crisis. One is the banks themselves having deposit flights because of the mismatch of interest rates between what they offer their customers versus money market funds, right? That's not going to stop until the Fed cut. So there's a bleed of assets that come out of the banking system. But the big one is commercial real estate. Nobody goes to the office anymore. So we don't know how big.
Ryan comes to my house.
Exactly.
That's true.
We don't know how big that is, but it's in the $1 to $2 trillion range. I mean, that's trillion with a T. These are big numbers. And this stuff, nobody's ever going to use this offices ever again. So it's going to end up on somebody's balance sheet, and it'll end up on the central bank balance sheet. But that's probably a 2024, 2025 story when things really pick up. So what else forces the central banks into the game? It usually is the old ones, inflation falling or unemployment rising. You know, I use that as a good proxy for where inflation's going to be, headline inflation is going to be in a couple of months. Just use Trueflation. You know, it's the on-chain inflation thing. That's about, what, 2.3%? I mean, I've been saying this for a while, is I think there's a probability that headline inflation, certainly PPI inflation, is negative over the summer.
Raoul notes that the entire financial world is short on the crypto upside, and the more prices increase and regulations shift, the more they have to be included in the crypto market. Pal says that regulations have had a bigger influence than anything since the introduction of Ethereum and stable coins, which is why he has always been long on his positions. Raoul is invested across multiple digital hedge funds and has observed that many things are being overbought. He says that during this time in the market, it's smart to immediately seize these opportunities before the bull market that's just around the corner. What do you guys think about Raoul Pal's latest prediction for crypto in 2023, and why Bitcoin and Ethereum will be the biggest crypto market drivers this year? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.